Based on the historical data and forecast, Bitcoin has shown considerable volatility. The RSI consistently dipped below 40, indicating oversold conditions, particularly on November 3rd, 4th, and 5th. The Bollinger Bands have also widened, suggesting increased price fluctuations. The forecast for the next week indicates a range-bound movement, hovering around $103,600 to $106,300. Considering these factors, I recommend a strategy combining RSI and Bollinger Bands. We will implement a long position when the RSI falls below 35 and the price touches the lower Bollinger Band. Entry price will be $103,600. A stop loss will be set at the support price of $101,300 to protect against a potential further decline. The target price will be $106,300, aligning with the upper end of the forecast range and the upper Bollinger Band. To maximize returns, we'll use a tiered approach. The initial target is $106,300, but if the price continues to rise, we will move the stop loss to the entry price of $103,600 and set a second target at $107,100, the resistance level. This allows us to secure profits while capitalizing on potential upward momentum. This strategy aims to capture short-term gains from the anticipated volatility while mitigating risk through strategic stop-loss placement. The portfolio will be 60% long Bitcoin, 30% in stable coins, and 10% in cash for flexibility to capitalize on future opportunities. Based on the historical data and forecast, Ethereum shows a downtrend with significant volatility. The price has been fluctuating between the support of $3,310 and the resistance of $3,800. The RSI indicates oversold conditions with a recent low of 29.2, suggesting a potential bounce. However, the forecast prices for the next week are slightly bullish, ranging from $34.30 to $35.80. Considering these factors, I propose a combined strategy utilizing RSI and Bollinger Bands for optimal returns. My recommended strategy is to enter a long position at $3,430. Given the recent oversold RSI reading, this entry point aims to capitalize on a potential rebound. Place a stop-loss order at $3,310, right at the support level, to limit potential losses if the downtrend continues. For the target price, I'll use the upper Bollinger Band, which is $3,580. This aligns with the forecast and provides a reasonable profit margin. This strategy combines the oversold RSI signal with the volatility indicated by the Bollinger Bands, aiming to capture a short-term upward movement while managing risk effectively. Based on the historical data and forecast, XRP shows a mixed trend with periods of consolidation and minor upward movement. The RSI fluctuates between 33.5 and 53.1, indicating both oversold and overbought conditions. The Bollinger Bands have been narrowing recently, suggesting a potential breakout. Considering the support price of $2.21 and resistance of $2.99, the price is currently trading within a defined range. The forecast for the next week suggests a gradual increase, potentially reaching $2.5. Therefore, I recommend a moderately bullish strategy focusing on short-term gains. My proposed strategy is to implement a combined RSI and Bollinger Bands approach. We will enter a long position when the RSI dips below 30 and the price touches the lower Bollinger Band, indicating an oversold condition. Specifically, enter a long position at $2.35. Set a stop-loss order slightly below the lower Bollinger Band at $2.2 to limit potential losses. Target a profit level near the resistance price of $2.99, aiming for a 35% gain. We can also consider a secondary target at $2.53, based on the recent high. This combined strategy leverages both momentum and volatility indicators to maximize potential returns while managing risk effectively. Based on the historical data and forecast, BNB shows a downtrend, with a recent bounce from the support level of $950. The RSI consistently remains below 50, indicating bearish momentum, with several days falling below the oversold level of 30. The Bollinger Bands are contracting, suggesting decreasing volatility, and the forecast price predicts further decline. Therefore, a short selling strategy is recommended. We will enter a short position at $992, placing a stop-loss order at $996 to limit potential losses if the price reverses. The initial target price will be $966, aligning with the forecast and support level. To optimize returns, we will implement a dynamic strategy based on the RSI and Bollinger Bands. If the price reaches the target of $966 and the RSI drops below 30, confirming an oversold condition, we will adjust the target price to $936, capitalizing on the continued downtrend. Conversely, if the price approaches the bottom of the Bollinger Bands and the RSI shows signs of reversal, we will consider closing the position and re-evaluating the market. This adaptive approach allows us to maximize profits while managing risk effectively. Based on the historical data and forecast, Solana has shown a downtrend, particularly evident in the period between November 5 and November 10, 2025, with prices dropping from $167 to $158. The RSI consistently remains below 50, indicating a bearish momentum, with dips below 30 suggesting oversold conditions. The forecast for the next week projects a slight upward movement, but still within a relatively narrow range. Considering these factors, I recommend a long position entry at $159 on November 11, 2025. A stop-loss should be placed at $155 to protect against further downside risk, aligning with the established support level. The initial target price is set at $167, representing a potential 8% gain. To refine this strategy, we'll incorporate Bollinger Bands. The price is currently near the lower band, suggesting a potential bounce. If the price breaks above the upper Bollinger Band, we can consider taking profits at $164, a more conservative target. Conversely, if the price fails to sustain above the middle band and continues to decline, we should consider exiting the position at the stop-loss of $155. This approach combines RSI's oversold signal with Bollinger Band's momentum indication, providing a balanced and adaptive strategy for maximizing returns while mitigating risk. Based on the historical data and forecast, TRON demonstrates a volatile trend with periods of consolidation and minor upward movement. The RSI consistently fluctuates below the overbought level of 80 and has recently been in the oversold region, below 20, on several days, indicating potential buying opportunities. Considering the support price of $0.284 and a resistance of $0.313, I recommend a long position strategy. We will enter a long position at $0.29 on November 11, 2025, when the forecast price is $0.29. The stop-loss will be set at $0.275, just below the lower Bollinger Band, to protect against a potential downward reversal. The target price will be $0.298, aligning with the forecast price and the upper Bollinger Band, offering a reasonable profit margin. To refine the strategy, we will incorporate the RSI and Bollinger Band signals. If the RSI rises above 30, consider taking partial profits at $0.295. If the price touches the support level of $0.284, and the RSI is below 20, strongly consider entering a long position at $0.284 with a stop-loss at $0.27 and a target price of $0.295. This combined approach, blending forecast data with technical indicators, aims to maximize returns while managing risk effectively. The overall portfolio will favor the long position strategy, adjusting positions based on real-time RSI and Bollinger Band signals. Based on the historical data and forecast, Dogecoin shows a downtrend with recent signs of stabilization. The RSI consistently fluctuates around the mid-level, indicating indecision. The Bollinger Bands have been widening, suggesting increased volatility, but the price is approaching the lower band. Given the current trend and the forecast prices hovering around $0.17, I recommend a cautious long position strategy. We will enter a long position at $0.17 with a stop-loss set at $0.162, right at the support level. The initial target price will be $0.178, aligning with the forecast high for November 16, 2025. To refine this strategy, we will incorporate a dynamic trailing stop-loss. Once the price reaches $0.178, we will move the stop-loss to $0.17 to protect profits. If the price continues to rise, we will adjust the target price to $0.182. This approach balances potential gains with risk management, capitalizing on the anticipated upward movement while safeguarding against a sudden reversal. This portfolio combines the RSI strategy, Bollinger Band strategy, and trend analysis for maximum efficiency. Based on the historical data and forecast, Cardano shows a downtrend with recent price fluctuations. The RSI consistently dips below 50, indicating a weakening momentum, and has been hovering around the oversold level of 20, suggesting a potential buying opportunity. The Bollinger Bands show that the price has been trading near the lower band, reinforcing the downtrend. Considering these factors, I recommend a long position with an entry price of $0.549. A stop loss should be placed just below the support level at $0.532, setting it at $0.52 to minimize potential losses. The target price should be set at $0.571, aligning with the forecast and a potential bounce from the oversold condition. To refine the strategy, we can integrate the RSI and Bollinger Bands. If the RSI rises above 30 and the price touches the bottom Bollinger Band, it could signal a potential reversal. Therefore, I suggest a secondary entry point at $0.553 if both conditions are met. The stop loss remains at $0.52. For this secondary entry, the target price will be $0.578, aiming for a more significant price increase. This portfolio combines the initial long position with a conditional entry based on technical indicators, maximizing potential returns while managing risk effectively. Based on the historical data and forecast, Wrapped Beacon ETH has shown significant volatility, with a recent downtrend followed by a slight recovery. The support price of $3,580 and resistance of $4,100 provide key levels to watch. The RSI has fluctuated between oversold and overbought levels, currently indicating a neutral to slightly bearish sentiment. The Bollinger Bands show that the price is currently near the lower band, suggesting a potential bounce. Considering these factors, I propose a combined strategy utilizing RSI, Bollinger Bands, and support/resistance levels. My strategy involves a long position when the RSI reaches an oversold level below $30, combined with the price touching the lower Bollinger Band. Specifically, I recommend entering a long position at $3,710. Given the recent downtrend, a stop loss should be placed slightly below the support level at $3,550. The initial target price is set at the resistance level of $4,100, aiming to capitalize on a potential rebound. If the price reaches $4,100, we can consider moving the stop loss to break even to secure profits and ride any further upward momentum. This combined approach leverages multiple technical indicators to increase the probability of success and manage risk effectively. Based on the historical data and forecast, Chainlink has been in a downtrend, with support consistently holding at $14.7 and resistance around $16.8. The RSI has frequently dipped below 40, indicating oversold conditions, while the Bollinger Bands suggest periods of volatility. The forecast for the next week shows a relatively stable price around $15.5, with slight fluctuations. Considering this, I recommend a contrarian strategy focusing on short-term bounces. We will initiate a long position when the RSI drops below 35, targeting a quick profit when the price reaches the resistance level. Specifically, let's enter a long position at $15.4 when the RSI falls below 35. Our stop loss will be set just below the support level at $14.6 to protect against further downside. The target price will be the resistance level at $16.8. This strategy aims to capitalize on short-term rebounds while mitigating risk with a tight stop loss. The predicted forecast price of $15.4 provides a favorable entry point, and the RSI's oversold signal confirms the potential for a bounce. This portfolio should yield high returns. Based on the historical data and forecast, Aave shows a volatile trend with periods of both upward and downward movement. The RSI consistently fluctuates around the 40 level, indicating neither strong overbought nor oversold conditions. However, the recent price action has seen a rebound from the support level of $214, suggesting a potential for a short-term upward trend. Considering the forecast for the next week, with prices ranging from $205 to $220, and the Bollinger Bands indicating potential for price movement, I propose a combined strategy. We will initiate a long position at $205, placing a stop loss at $199 to mitigate potential losses if the price declines. Our target price will be $229, aiming to capitalize on the predicted upward momentum. To further refine this strategy, we'll incorporate the RSI and Bollinger Bands. If the RSI dips below 20, indicating an oversold condition, we will enter a long position. Conversely, if the RSI exceeds 80, suggesting an overbought condition, we will consider exiting the position. Furthermore, if the price touches the lower Bollinger Band, it signals a potential buying opportunity, while a touch of the upper Bollinger Band suggests a possible selling point. This combined approach allows for dynamic adjustments based on real-time market signals, maximizing potential returns while minimizing risk. The portfolio will be 60% based on the long position at $205, 30% based on RSI, and 10% based on Bollinger Bands. Based on the historical data and forecast, Injective has shown considerable volatility with a recent downtrend. The RSI consistently hovers below 50, indicating a weakening momentum. The forecast prices suggest a continuation of this downward trend, with a potential dip to $7.05. Considering the support level at $6.32 and the current RSI readings, I propose a long position strategy when the price touches the support level. Specifically, enter a long position at $6.32. Place a stop-loss order slightly below the support at $6.25 to mitigate potential losses. Set a target price at $7.65, aligning with the forecast high for the week. To further refine the strategy, we'll incorporate Bollinger Bands. When the price touches the lower band and the RSI is below 30, it indicates a potential buying opportunity. Therefore, combine the RSI and Bollinger Band signals, enter a long position at $6.25, place a stop loss at $6.15, and target $7.64. This combined strategy leverages both momentum and volatility indicators for a more robust approach. The portfolio will be 60% long position, 20% short position, and 20% cash. Based on the historical data and forecast, Raydium demonstrates a downtrend, particularly evident in the price decline from $1.8 to $1.41, followed by a slight recovery. The RSI consistently remains below 50, frequently entering oversold territory below 30, suggesting potential buying opportunities. The forecast predicts a fluctuating price range around $1.39 to $1.5. Combining these factors, I recommend a long position strategy targeting a rebound from the oversold condition. The entry price will be $1.33. The stop loss will be set at $1.29, just below the support level, to mitigate potential losses if the downtrend continues. The initial target price will be $1.5, aiming for a substantial gain. To refine the strategy, we'll incorporate the Bollinger Bands. When the price touches the lower band, it signals a potential oversold condition, confirming our RSI-based buy signal. The portfolio will prioritize the RSI strategy with modifications based on Bollinger Bands. We will enter a long position at $1.33, with a stop loss at $1.29. The first target price will be $1.5, and if that target is reached, we will move the stop loss to the entry price of $1.33 to secure profits. The second target price will be $1.63, and if this target is reached, we will take partial profits and move the stop loss to the previous target price of $1.5. This approach balances risk and reward, capitalizing on potential rebounds while protecting against further downside. Based on the historical data and forecast, Curve DAO shows a downtrend with significant volatility. The RSI consistently dips below 50, indicating weakening momentum, and nearing the oversold level of 20 for several days. The Bollinger Bands show that the price is nearing the lower band, suggesting a potential bounce. Considering the forecast, the price is expected to continue declining initially, then show signs of recovery. Therefore, I recommend a contrarian strategy focusing on short-term gains. I suggest entering a long position at $0.46, placing a stop loss at $0.421, which is the support level, and setting a target price at $0.496, aligning with the upper Bollinger Band and a potential resistance level. To refine the strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI reaches below 20, indicating an oversold condition, we enter a long position at $0.46. The stop loss is set at $0.421, the established support level. If the price breaks through this level, it signals a stronger downtrend, and we exit the trade to minimize losses. The target price is set at $0.496, coinciding with the forecast and the upper Bollinger Band, which could act as resistance. This strategy aims to capitalize on short-term bounces while mitigating risk through a well-defined stop-loss and target. This approach balances potential gains with risk management, crucial for high-return investment. Based on the historical data and forecast, Pump.fun exhibits a volatile trend with periods of consolidation and minor downward pressure. The support price consistently remains at $0.00346, while the resistance fluctuates around $0.00595. The RSI indicator fluctuates between 40.9 and 57.1, suggesting neither strong overbought nor oversold conditions. The Bollinger Bands show that the price has been trading within the bands, indicating moderate volatility. Considering the forecast data, which projects a price range between $0.00401 and $0.00435, a conservative approach is warranted. I recommend a strategy combining RSI and Bollinger Bands for optimal risk-reward. My proposed strategy involves a long position when the RSI dips below 40 and the price touches the lower Bollinger Band. Entry price will be $0.0038. A stop-loss order should be placed just below the support level at $0.0035 to limit potential losses. The target price will be set at the resistance level of $0.0050, aiming for a substantial profit. This strategy leverages potential rebounds from the support and the lower Bollinger Band while mitigating risk with a well-defined stop-loss. This combined strategy provides a balanced approach, capitalizing on short-term fluctuations while protecting against significant downside risks. Based on the historical data and forecast, Hedera shows a volatile trend with periods of consolidation. The RSI consistently fluctuates around the 50 mark, indicating neither strong overbought nor oversold conditions. However, the recent dip on November 3, 2025, with an RSI of 39.2, suggests a potential oversold opportunity. Considering the Bollinger Bands, the price has recently been trading within the bands, indicating a sideways movement. The forecast for the next week projects a slight upward trend, with prices hovering around $0.18 to $0.19. Therefore, I recommend a long position with an entry price of $0.184. To manage risk, set a stop-loss at $0.163, which aligns with the established support level. For the target price, I anticipate a move towards the resistance level of $0.208, but given the recent sideways action, a more conservative target of $0.197, matching the forecast high for November 17, 2025, is prudent. This strategy combines the oversold signal from the RSI, the upward forecast, and the established support and resistance levels. The potential profit is $0.197 minus $0.184 is equal to $0.013 per Hedera. This position offers a favorable risk-reward ratio and aligns with a cautiously optimistic outlook for Hedera in the short term. Based on the historical data and forecast, Starknet shows a clear upward trend, particularly evident in the recent price surge from $0.102 to $0.167. The RSI consistently climbed above 40, peaking at 66.1, indicating strengthening momentum. The Bollinger Bands also suggest a widening trend, with the price frequently touching the upper band, signaling bullish sentiment. Considering the forecast for November 11 to 17, with prices ranging from $0.139 to $0.174, I recommend a long position entry at $0.139. We will set a stop-loss at $0.13 to protect against potential pullbacks, and a target price of $0.174 to capitalize on the anticipated upward momentum. To enhance this strategy, we'll incorporate an RSI-based adjustment. If the RSI reaches 80, indicating overbought conditions, we will take partial profits and reduce our position size. Conversely, if the RSI dips below 20, signaling an oversold condition, we will hold the position and wait for a rebound. The core strategy remains a long position with an entry at $0.139, a stop loss at $0.13, and a target price of $0.174, dynamically adjusted based on RSI levels to optimize risk-reward ratios and maximize potential returns. Based on the historical data and forecast, official Trump shows a clear upward trend with consistent price increases. The support price of $8.53 acts as a strong floor, while the resistance at $9.25 presents a potential ceiling. The RSI values fluctuate between 49.5 and 69.8, indicating periods of both oversold and overbought conditions. The Bollinger Bands consistently widen, suggesting increased volatility and potential for price swings. Considering these factors, I propose a long-term investment strategy focusing on capitalizing on the upward trend while managing risk through strategic entry and exit points. My recommended strategy is a combination of RSI and Bollinger Band signals. We will initiate a long position when the RSI dips below 50 and the price touches the lower Bollinger Band, indicating a potential oversold condition. Specifically, we will enter a long position at $8.13. Place a stop-loss order at $7.8 to protect against a sudden downturn. Our initial target price will be the resistance level of $9.25, aiming for a substantial gain. If the price reaches $9.25, we will reevaluate the trend and consider adjusting our strategy or setting a new target price based on further analysis. This approach combines the momentum signals from the RSI with the volatility assessment from the Bollinger Bands to maximize potential returns while minimizing risk. Based on the historical data and forecast, World Liberty Financial shows a volatile trend with periods of consolidation and upward movement. The RSI fluctuating between 33.3 and 57.6 suggests the asset has been both oversold and overbought recently. The Bollinger Bands have widened, indicating increased volatility. The support price consistently remains at $0.136, while the resistance is at $0.196. Considering the recent upward trend in the forecast prices, particularly reaching $0.147 on November 17, 2025, I recommend a long position strategy. The entry price for this long position should be $0.126, coinciding with the first forecast price and the recent low. A stop loss should be placed at $0.116, just below the recent low and the lower Bollinger Band, to limit potential losses. The initial target price is $0.155, the highest price in the historical data. If the price reaches this target, we can consider moving the stop loss to the entry price or setting a second target at $0.196, the resistance level, for higher potential gains. This strategy combines RSI, Bollinger Bands, and support/resistance levels for a balanced approach, aiming for high returns while managing risk effectively. Based on the historical data and forecast, Uniswap exhibits a clear upward trend, particularly evident in the recent surge to $9.52. The RSI consistently dips below 30, indicating oversold conditions, while the forecast projects a continued rise towards $9.28. Therefore, I recommend a long position strategy. We will enter a long position at $6.87. The stop loss should be set at $5.07 to protect against potential downturns. The initial target price will be $8.62 based on the forecast. If the price reaches $8.62, we will move the stop loss to the entry price of $6.87 to secure profits and allow for further upside potential. To refine this strategy, we will incorporate the Bollinger Bands. When the price touches the lower band, it signals a potential buying opportunity. The forecast indicates the price will remain above the lower Bollinger Band, suggesting a continued upward trajectory. If the price reaches $9.28, we will set a final target price at $10.2, the resistance level. This portfolio combines the RSI oversold signal with the Bollinger Band's confirmation of an upward trend, providing a robust and high-return investment strategy.